Welcome, everybody, to our first Capital Insights webinar of the new year. Thank you so much for joining us today. We designed this series of webinars to provide information and have a discussion on topics related to innovation startups in order to help entrepreneurs as they scale their business. Today's session focuses on the importance of having a board of advisors. I'm Petra Stegman, VP of Educational Programs at Connect. Connect is a nonprofit organization created over 30 years ago. Since then, we continue to work with life science and high-tech entrepreneurs to help them grow and scale their companies through the various programs we offer. We're excited to have you with us, and we have a stellar panel lined up for you today, so let's get started. It now gives me great pleasure to introduce today's moderator, Arthur Suko. Dr. Suko is an innovative executive leader and scientist with 15 years of experience leading drug development programs across multiple therapeutic areas, leveraging small molecules, biologics, and oligonucleotides. Most recently, he founded DTX Pharma and served as its chief executive officer until it was acquired for $1 billion by Novartis. In 6 years' time, he helped the San Diego-based RNA company develop a pipeline of therapies for rare diseases and raised more than $100 million in grants and leading healthcare investors. He currently serves as a strategic advisor or board member to Transcera, Actio Biosciences, Palm Therapeutics, Sinopia, CMTRF, and several investment groups. Prior to DTX, he served in roles of increasing responsibility at Johnson & Johnson, MedImmune AstraZeneca, and Regulus Therapeutics. Dr. Suko received his undergraduate degree in biological sciences from the University of Delaware, and his PhD in biomedical sciences pharmacology from the University of California, San Diego. Welcome, Artie.
Thanks, Petra, for the introduction. Really excited to be here today to talk through advisors. I know over the course of DTX in my career, they played a very significant role behind the scenes and sometimes outwardly in fundraising, day-to-day decisions in the company. And so I have with me today Nick Halverson from Ocuspace and Andrew Rudd from Palm Therapeutics, and I'm going to ask them to spend a few minutes introducing themselves, a little bit about the origin story for the company, as I think that will be important to talking about how advisors came to be and how they sought out advisors for their respective companies. So why don't we start with in alphabetical order? Andrew, why don't you go first, and then we'll go to Nick.
All right, great. Well, thanks, Artie. Excited to be here and share a little bit about my experience with advisors and really how that's been a essential part of growing our company. So a little bit of background. Name's Andrew Rudd. I'm the founder and CEO of Palm Therapeutics. We are essentially developing precision medicines for traditionally intractable drug targets. And the way we're doing this is by targeting a post-translational modification called palmitylation. So it's something that's essential for the function of a number of proteins involved in several different disease pathways. And we've built both the discovery and the drug development side that allows us to really pursue this area of therapeutics for the first time. A little bit of my background, how I got here. I'm a scientist by training. I moved out to San Diego in 2013 to do my PhD in chemistry at UC San Diego. And it was really during that time I became very interested in this biological process called palmitylation. And what we found in the lab I was working in was some of the tools we had developed to do something more basic science could actually be translated into a therapeutic approach for drugging palmitylation. And that really became the seed for Palm Therapeutics. And I'm sure I'll talk a little bit more later on about really how we kind of transitioned from that initial seed idea to an incorporated company.
Okay, thanks, Andrew. Nick.
Awesome, fascinating background. And all three of us UC San Diego alum, so that's go Tritons. I started OccuSpace, and Nick Halverson, CEO, co-founder of OccuSpace. Appreciate you guys setting this up and having me on here. Excited to chat through all this. I started OccuSpace when I was a junior electrical engineering student at UCSD. I'll start with kind of the origin story and then how the company's transformed to actually figuring out how we can drive value with what we do. Originally, this wasn't supposed to be a company. It was supposed to just be, a school project. I was an impatient kid, grew up in a small town in Florida, moved across the country to go to UCSD and get my double E degree. In my junior year, I was walking up and down Geisel Library, and I was like, man, I wish I knew how busy every floor was before I came. I hate crowded spaces. I hate wasting time. I spent like 20 minutes going up and down 8 floors of the library looking for a seat. And then I thought, you know, I'm an electrical engineering student. I should be able to build a sensor that can passively count how many people are in a space in real time. I'll report that data on a free app that people can download. We'll do this for the libraries, the gyms, the dining halls, and I'll use it. Maybe other people will use it, maybe not. Either way, it'll look good on my resume and I can go get a job at Qualcomm or something. That was the plan. I recruited my co-founder who's a master's in machine learning. I built a sensor that could scan for Bluetooth and Wi-Fi signal data in an area. He took that signal data and got to a people estimation with a high degree of accuracy. In our senior years, right before we graduated, we released this app. I made one Facebook post about it, and on the first day, 5,700 students downloaded it. And the first week, 10,000 students were using it. And we're like, wow, like now this is a great resume builder, but it still wasn't a company to us. We just were pumped that other people resonated with our pain point. And then the vice chancellor in charge of real estate at UCSD called me up 2 weeks after we launched, and he was like, Nick, how do you have all this data on my buildings? I'm spending $1.2 billion a year in construction, and I have no idea how my buildings are being used. And I was just like blown away that somebody could spend $1 billion on anything in today's day and age without data backing up those decisions. And so we kind of had this vision right then of, you know, we're more used to the digital world where like I would be an idiot if I made a website or an app without analytics on how many people come, what do they click on, how long do they stay. Yet people are apparently spending billions of dollars a year on physical spaces without that same data set. So the vision for OccuSpace became, can we be the web analytics for the physical world and do it in a really cheap, easy way to capture this data? And now we work with about 100 universities and corporations across the country measuring their office space and helping them figure out how to return to the office and get efficient with their office space portfolios.
Awesome. I have lots of questions since we haven't connected very much about it, but I'll save those and we'll focus on advisory boards. And so I think Andrew and Nick, one thing you both seem to have in common is your companies kind of grew out of work you were doing either in school or postdoc. And so yeah, I guess that's a little bit different than me in that I had, about a decade in industry. So surely there were a lot of things, a lot of gaps in your knowledge about, building companies and going out into the real world. So can you maybe talk us through how, coming out of the university, you thought of advisors or advisory boards as you were putting together the company, whether you thought of a board or whether you surrounded yourself with a suite of advisors. Maybe we can start there about how you how you thought about advisory boards, and we can jump in from there.
Yeah, I can start on that one. So yeah, I think that's absolutely right. And I think especially in the biotech pharmaceutical space, I was very cognizant of the fact that there were a lot of gaps in my knowledge and skill set that we had to fill through advisors or other team members or consultants. And so I think right out of the gate, it was clear to me that I had to get help around the table, either in the form of advisors and consultants who had that expertise in both drug development, but also just the knowledge of how to run, a biotech business, right? And so myself, I was a first-time founder as well. I really just kind of jumped in the deep end because I believed in the potential of the science, and I figured, how hard could it be to figure out all those other aspects of the company? And it turns out very difficult. And so a big part of kind of our initial success, I think, was getting the right people around the table. But the it's one thing to realize that you have those gaps, and then it's another thing to try and figure out how to fill those and get connected to the right people. And so, kind of along those same lines, being coming right out of academia, I didn't really have any kind of network in the biotech space, and so one of the first things I had to figure out was how to tap into you know that industry, start to build my network, start to connect with the right people. And I think the short answer is that it takes time. I think on our end, we had to kind of first build some legitimacy and a track record, and we did that partially through kind of successfully winning some SBIR grants, and then partially through participating in several different entrepreneurship programs at UCSD or through other organizations. I can talk about those later. But that was really kind of how we kind of got plugged into uh, to the right people and started to be able to build our advisory board.
Yeah, on my end, kind of similar story. I didn't know anything about running a company, and so once I started to get the feeling that this really could be a real company, I applied to every entrepreneur program available, the basement, and pretty much every other thing that UCSD had and San Diego had in general. And I went to every event possible, met everybody I could, and I got every single person on an email list. I was doing at the time, I think like bi-weekly company updates to these people, and I was like 250 people or something, just anybody that would respond to me and help me, and I would send these updates, and every email I would have asks of people for help. And the original advisory board that we started to get was just like the people that were leaning in and kind of showing interest in the company out of this big sea of potential folks in the startup ecosystem in San Diego. It's just like who's leaning in, who's engaging with me. And then the rule that I had from the get-go was like, I'm not going to make anybody an advisor until they work with me for at least 90 days, like with no agreement in place. And so I was like, I want them to be genuinely interested in the business, interested in kind of helping me a little bit. And once I saw they were willing to do that without, a formal advisor agreement, then, I would bring it to them. I've found generally the best advisors for me have been the people that weren't immediately asking for an advisor grant, but the folks that just were providing value. And then I was saying, hey, you're helping so much. I want to bring you on as an advisor. And so that's kind of the original formation of it. It was just trying to get everybody I could to engage with me and then work with the people that leaned in.
I think it's really interesting. I don't know if it's like my life philosophy to, the relationship is really important. And so, as now, I guess, graduating to an advisor to companies that, period, like I'm never in a rush to enter into an agreement. I want to understand, develop the relationship. So it's interesting that you approach it that way. And I think that's really valuable because if I go back and think about the advisors that I had they never asked for anything, right? They were just good people within the San Diego community, that were going to help me. And then eventually I was like, of course I want to see this person. If I win, they win. So cool. So there's like a bajillion different directions we could go. But maybe the first one, since you both brought up these programs, either within San Diego or within the greater California region, did any relationships come out of those interactions that were important? And if so, what kind of expertise or what was the value that these organizations bring in terms of advice and advisory roles? And maybe we'll switch the order. So Nick, you go first this time, and then Andrew can go second.
Yeah, I'd say the first group we started working with was the basement at UCSD. Got in there. I still have like the video pitch that we submitted to them and like the most cringy thing in the world. But they accepted us. And then they kind of like put you through the fast track of, just the basics, blocking and tackling. Like, how can you make a decent pitch deck? How can you just get used to presenting in front of real people and not get as much of the nerves and just, hit the points that people want to make. And so that was all super valuable. And then we won things like this. I actually forget the name of this one pitch contest. So we got like 15 grand in like legal fees from DLA Piper, and that helped out a ton in those early days, but goes a lot faster than you think it will when before you know how much lawyers cost. And then even getting into Connect and the cool companies list and all those things. And I mean, Mike Kren, he introduced me to the tons of VCs and going to all the networking events and everything. But Mike's intro to this guy, Jeff Bocan from Okapi Capital, uh, he was eventually the guy who led our Series Seed, our first institutional round. It took maybe, I don't know, 2 years or something to work on Jeff and get them over the line. But that came directly from, a Connect introduction. And then our next institutional round came from a connection from Jeff. And so, like, there's a pretty clear line where OccuSpace really wouldn't exist without some of those early pitch contest groups that we won a little bit of money. We're able to buy some of that original hardware that we wouldn't have gotten without that, practice the pitch, and then eventually like direct connections that led to our, lead investors for our last couple rounds. So, I mean, yeah, like we probably wouldn't be a company without some of those early early systems that took us in when we didn't know anything.
Andrew?
Yeah, I again I participated in a number of those same programs as well through UCSD, and then a couple externally. Creative Destruction Labs was one I did early on. California Life Sciences, and of course Connect had been a huge help as well. And I think depending on the program, I got kind of different things out of it. Some of these are set up in a way where which was extremely helpful, but it was more of kind of pressure testing your idea. So bringing in, experts from all different areas of, the pharmaceutical industry, of from the investor side, and just really kind of pinning down, okay, tightening up the pitch deck, asking all the hard questions, forcing you to really think about you know what is the story and what is the plan for what we're doing. And that was extremely valuable, especially just kind of getting an understanding from folks about what does a biotech company look like, and what is the trajectory of a biotech company. And then on the other end, groups like Connect helped really plug me into the San Diego ecosystem, and bring on, build relationships, and eventually bring on great advisors like Artie here, who is, as we mentioned before, is the advisor to Palm Therapeutics. So, um, yeah, I think those were a great way to kind of get my foot in the door, and then kind of get me comfortable and build an understanding of, okay, yeah, these are the kind of people I want to bring around the table. This is how I, reach out and approach those people, and start having those conversations.
One thing I want to add to that, I think you make a really good point on that early pressure testing of like, is the idea good? Is like, what's the direction that you're gonna kind of tweak it and pivot it? I think that was so important in all of those like early, pitch contest judges and experts in the area that would pressure test us with our ideas. 95% of them, I mean, the biggest value is the people who really push on you and give you that pressure test. I'll also say I think every entrepreneur needs to be aware that not every person out there is right about everything, especially when you're in sometimes these like niche little verticals. Every startup's different, every go-to-market is different. And so I do look back on a couple things that I would want to kind of warn founders of, and it's hard. It's like a gut check for every founder and every idea, is that you want to listen to these folks who have been there, done that, and really examine your idea and pivot it where needed. But I also had some incredibly smart, successful people tell me, like, Nick, this idea is idiotic. You're wasting your time. What you're building is like what a 5-year-old can do. A 5-year-old can count people. And I had one of the most successful people in San Diego tell me, like, just stop wasting your time in building something like this. And that was tough to hear, especially early on. And you got to balance that with everybody else's feedback. And sometimes people might be wrong, even if they're super successful and super smart. So I just like warn founders that get all that feedback, pressure test your idea. You're definitely not right about a lot of stuff, but take each individual person's feedback with a little bit of a grain of salt.
Yeah, Nick, I kind of echo those sentiments as well. I've had very similar experiences, and yeah, it's very hard early on not to kind of question yourself, especially when you feel like you're getting this feedback, like you said, from people who are very successful and experienced. Um, but then I guess you can part of being an entrepreneur, I guess, is just kind of having the audacity to do it anyway. And so yeah, I think that's super important to realize, is that you kind of have to um kind of push through that, try and synthesize the feedback you're getting, and take away the things that are helpful for you.
Hey, sorry guys, I got kicked out. My internet dropped off. So I missed probably a minute. But I guess where I was going to go next was talking more about the day to day with the advisory board, the people that represent the advisory board, and maybe you guys can give some specific examples of how you've leaned on people. There's also a question here on how you form your boards, meaning do you bring together similar groups of advisors, say for a therapeutic area? Is it a combination of scientific, business advisors, lawyers? People are chiming in for some questions there. So I think that day to day and specific examples too, but not me, Andrew.
Yeah, I'll jump in real quick and say, like, early on it was just I wanted other people who had sat in the founder seat before, and like tell me how to get through these early days and go from that 0 to 1. And I would have a relatively low number of people that I could really engage highly and like meet with an hour a week or something like that. Today at our stage, I'm really looking for like a specific job to be done. I need an advisor that can help me with, understanding this specific, like, target customer better, or this vertical better, or, this is going to be an advisor that's going to help, drive revenue in this way. Or like a CEO mentor advisor. So each advisor is a lot more kind of narrow in what I expect from them, and I try to make that super clear with all of them. And it's not to say I don't want their advice in other areas, but it's a little bit more specific of like, hey, you're our leadership team coach, you're my CEO mentor, you're going to help us on the go-to-market side, you're going to help us in this vertical. And so that's kind of how we structure it today, and have pretty clear kind of written goals for advisors, and a steady cadence of when we meet with them.
Yeah, I'll jump off there. And yeah, I think, as kind of an earlier stage company, what I've found has been the most valuable type of advisor is kind of that advisor who's been in your shoes before. So bringing on someone who was a successful, biotech founder, who was kind of in, even not necessarily in the same therapeutic space, but it had that experience of, starting from early discovery stage and bringing that all the way forward. And so I think, especially at the early stage, has been super important. And I think I got some of the best advice, from those folks. In terms of how we've started to kind of structure and formalize our engagement with advisors, now we do kind of regular advisory board meetings. So every month or two, we're bringing all the advisors around the table, looking at the data, discussing the business plan. And I think that's been, exceptionally helpful, one, in just bringing all that great experience and knowledge into the company and helping decide on next steps. But it's also just helpful for, myself and the team to think about, okay, we have a meeting coming up in a month or two. What are the most important kind of short-term milestones or goals that we want to hit? And so it helps us kind of break things down into our next kind of period of effort. So I think that's really helpful as well.
And then a question from online, and it's kind of one of the next up topics is, how do you go about, deciding whether someone is on the advisory board, whether they're just a consultant, whether they're just giving you advice, and what is the structure of that relationship? What is the kind of compensation that you guys prefer to offer? What does that look like for advisors? I don't remember who went first last time, but you can switch it up if you want.
Sure, I'll jump in then. Yeah, so the the question was, what kind of expertise do we look to bring in, and how are we thinking about kind of the compensation as it
What?
relates to that, whether it's an advisor or a consultant?
Yeah, how do you decide who's on the board? And once you
Gotcha.
make that decision, what is compensation structure, time period, time commitment that you expect?
Mhm.
I think that maybe you could play on that. Each of you could play off of that.
Yeah. So in terms of kind of deciding who we put on the board, I think this kind of goes back to, one, that relationship building, right? And so I learned the same lesson that Nick did, which was, oftentimes it's the people who don't ask for anything in return, and are willing to kind of offer up their time and expertise that end up being, the best kind of advisors. And so, I think that's part of it. And then just kind of understanding, with our company stage, what are the specific needs we have right now. And so for us, I think having people who have an understanding of, early stage biotech fundraising and, um, just execution, were extremely valuable. So more of a generalist role are the people that we're trying to bring on initially to the board. And then, at least where we are right now, there's other pieces of expertise that just made more sense to bring on as consultants, because, that's kind of how we're working with them, right? We're looking for a specific deliverable related to a project, and paying for that kind of expertise. And so I think, the people that you want around the table are the people that, you know, kind of know what you're going through and really have a personal interest in seeing you succeed.
And then on compensation, just as a
Oh,
follow-up
right,
to make
right.
sure we get this, I mean, is it typically equity, cash, a combination of both?
Yeah, so for us, the advisory board is equity in the company. And so I think that's pretty standard across the board. People do different amounts of equity or vesting schedules, but generally the compensation would be through stock options.
Yeah, so similar story here on kind of how we make those decisions and when we want to bring someone on. Like I said, usually I'd never add an advisor, give them an equity grant unless they've been working with us for at least 90 days, usually longer than that. My preference, especially early on, was to do maybe slightly smaller. And I agree with it's pretty much all equity based, and then a little bit later you might be bringing on like consultants to do certain things that you pay cash instead of equity, but I wouldn't classify those folks as advisory board people. Um, Early on, what I tried to do, which some people didn't love all the time, but I think benefited the company in the long run, was do smaller than average equity grants for advisors vesting over short periods of time, like 1 year. I'd do like a 1 year grant, and maybe it would be, 50 to 75% smaller than maybe what the average advisor grant was. And the basis was, hey, if you're still providing me value in a year, then I'm gonna give you another grant. But things change so fast in those early days that, maybe you're not going to be the right person in a year. Maybe we pivot to something that's not your expertise or whatever it may be. But I really think that was a pretty good decision we made early on to keep advisors on the hook. If you give somebody a big grant and a 3 year vest early on, it's like you might not see them that much at some point. Maybe they'll be really involved for 6 months or 9 months or something, but then they might be in year 2 or 3 and you're not seeing them. They're not bringing in that value, but they've still got that grant. And of course, you can always say you're gonna stop that vesting, but that doesn't happen that often. So that would be a general high level thing that I liked that we did. And then later stage, you pick your advisors a little bit more carefully. You get intros from your board, from your investors, and they're super vetted and you know them. And then you give them bigger, or how I've done it at least, is give them bigger, longer vesting terms. And then there's a little bit of a trade-off with, as your revenue gets bigger, your company gets bigger, you can kind of give smaller equity grants, whereas maybe in the early days you might be given 0.5% or 1% for an advisor grant, or that was more normal. Once you're later stage, you might be given 10 basis points or 20 basis points, depending on the advisor.
Okay, I know I'm all over the place, but the next place I want to go is a specific example of a challenge or problem that your advisors help you to solve. Their insight, their input, a couple of them, or something you went to them with, and maybe were surprised about their answer and went in the direction they recommended.
Yeah, I'll start on this one, and I'll say some of the stuff that's the most helpful for me is still this how to run a company as you grow, what all the internal things you got to think about, managing your team, setting up the right incentives, talking about employee salaries and employee equity grants, and vetting your VCs and getting ready for board meetings and things like that. That's still a lot of the stuff I go to my best advisors with and say, hey, I've got this situation. How do I work through a kind of sticky situation that I've never been in before? And they're able to know the business, but be a little bit outside of it and give me really good perspective. Uh, even on like employee equity grants, where sometimes, me and somebody I really want to bring on the team might be in different places or salary, they can come out, give me perspective, walk me through kind of how they would handle it, and that helps a lot. And then even on like getting ready for board meetings, we just had a board meeting yesterday, and I was walking my advisor through the board deck a week or two before the meeting, and he dug down on one of our, company annual goals that I was presenting, and I was just like, well, what does this even mean? This isn't what you want to do. This is like your tactic to get to something else. And dug down deep, and one of our big goals this year is being a lot more in person with our customers, our prospects, meeting with them in person. And he's like, that's not a real goal. That's like a tactic for something else. What's your real goal? And we dug down, and it's like, oh, we want to increase our pipeline metrics. We want to improve our close rates, our proposal rates. And the strategy we have is to go out and meet people in person more. And so even that kind of pushing from him then really improved the kind of goals we have as a company and how we did our board presentation. So that's one example. There's, hundreds of them.
Oh, that was a
Yeah, I
great
think one
example.
kind of recent. Oh,
I was
yeah,
just
go
going to
ahead.
say, Andrew, take it away.
Okay. Yeah, I think one of the first examples that comes to mind is I think with some recent fundraising that we got across the line. There's more one instance where I think I was frantically calling advisors and being like, wait, what does this mean? We're in the process of negotiating terms. Things are changing quickly. We're trying to get something done, and just kind of bringing in that perspective about, I think, both communication with investors and then just kind of a deeper understanding of kind of the financing terms that we're looking at and how to, I think, navigate some of these conversations had been really helpful, especially kind of going through this for the first time. It's you know, uh, and I'm sure Nick probably experienced this as well. Kind of that first round of kind of investor talks and meetings. Yeah, it was completely new to me, and so having someone who'd been there before and could help, uh, I think, interpret some of the things that we're seeing, but also just kind of center my own thinking about what was going on was extremely helpful.
I'll just add to that real quick because this is maybe some of the most valuable advisor advice I've ever gotten on how to run a fundraising process. When I did our seed round, it took us like 12 months or maybe more to close the round. I was like, oh, I'm talking to 5 VCs and I think they really like me. So like before I go try to talk to a bunch of others, like let's just finish the process with them because they're totally going to invest in me. And then, of course, that doesn't happen. And then it's like you're doing this process where you're just talking to a couple people at a time and it strings out over the course of a year and it's rough for a lot of reasons. And he advised me not to do that at the time. I didn't listen to him. And then we went into the next fundraise and it was like, look, you want to maximize the number of term sheets you get at the same time. And it's like we're going to line up so that you talk to 50 to 100 VCs in 1 month and you set the date with all of them that at the end of the month we're going to be reviewing term sheets and we're going to make a decision moving forward. And like getting the data room dialed in before that, having all of our advisors and our investors do like a synchronized reach out to their network and like track everything in essentially like a spreadsheet CRM and really have a dialed in fundraising process where you are hitting everybody possible at the same time. I'm on 5 VC calls a day for a month pretty much. And then you can actually create that little bit of FOMO and get multiple term sheets at the same time. And then that's really when your leverage skyrockets as a founder, as a CEO of a startup, of like, if I can create urgency with a VC in the fundraising process, that's like the hardest thing in the world to do. And so that really tight, like high volume fundraising strategy made our last round just like, I mean, we closed it in 2 or 3 months and like it was so much better than the previous round in every measurable way. And I think it was really because of that advisor's feedback on how to run the process that I didn't listen to the previous time.
Got it. Thanks for those sharing those stories. What about the role of the advisory board relative to the board and that relationship? So, for example, I used to use my advisory board. I'd invite my board to some of the meetings to keep them grounded in the reality of timelines and sort of the steps you need to take to get from point A to, whatever the promised land is. Do you guys um, do something similar? Are the ways that you use your advisory board to support, things you want to get done at the board level? It'd be great to hear you guys talk through that a little bit if you do that.
Yeah, I mean, I'll start off because I think mine's probably a short answer. So, as an early stage company, our board structure is not very complex. It's, myself and my co-founder. But what we've done that I think is really valuable is that in building this strategic advisory board, we've tried to, treat it in many ways as, as a board, right? Where we're having structured meetings, we're, seeking feedback on, both the scientific and the business strategy as we're moving forward. And so, at least our thinking at this point has been this is kind of helping us get in good habits and prepare for when we will have, external members on our board.
On my end, it's probably something I don't do well enough today, really connecting the advisor board and our full board. Our independent board member is like my longest advisor and real like CEO mentor. And so he's kind of that bridge of he's been my longtime advisor mentor. Now he sits in our independent seat. And so I get a little bit of both ends with him, but kind of the rest of our advisors and our board are kind of siloed a little bit. Something I'd like to do a better job of managing in the future and trying to get them together, create a little bit more value. But it's on the list of 100 other things I'm trying to get done.
Okay, and as a reminder, if you guys have questions on the line, feel free to send them through. There's a couple quick ones. I think they're going to be quick, but maybe not. When an advisor relationship goes poorly, how do you go about moving on from that advisor? If they're not having an impact on the business or you're not seeing eye to eye with them anymore. Do you just stop calling them? Do you do something more drastic?
I can go ahead, Nick.
I was gonna say it's pretty easy unless if they have an advisor grant that's still vesting, that's where it starts to get a little bit tricky. Um, Generally, the way I've done it, which maybe isn't the right way to do it, is like they're generally it's never really soured to the point where I can't talk to them. It's just kind of gone to the point where they're not as helpful and they're not as active. But there's still people I can call and talk to. And so I've never, you know, I've kind of said, okay, if you're not super interested in the business anymore, if you're not super interested in helping me grow, then I'm not going to try to force you to do that. And then the decision really becomes, am I going to try to, say I'm going to stop your vesting or not if you are an advisor with an actual grant? That becomes a harder decision. I've usually kept the grants in the smaller and shorter term vesting, and so I never really have done that. Um, but if I had bigger grants and longer vesting terms and people kind of phased out of being helpful, I think that's what you got to do because that equity is going to be really valuable later on.
Yeah, I think, I can agree with that. We've had, um, I think one situation where, yeah, if someone kind of stopped being helpful or, maybe even was being a little harmful to the success of the company. And so you kind of have to think to yourself, just like Nick said, do we just want to kind of cut our losses, maybe to smooth things over as we'll let them continue to vest and just kind of, what it's worth it just to kind of um, remove that factor from the room, or do we want to actually kind of just end the relationship formally? So, yeah, I don't think there's a right
And then
answer, but
what?
the obviously I think that
Yeah, I mean, I tend to agree. I mean, most of the time, I tried to structure them pretty short so that they, if it didn't work out or if they're not as engaged, then it just runs its natural course. What about the role that the advisory board plays in the fundraising process? Do you bring them to diligence calls? Do you um, use them as, I don't know, character references or references with the VCs? Do you have them call the VCs to learn about, in your case, Andrew, indications and whatever their expertise is? Um, yeah, I mean, I think they play an important, at least in my experience, they play an important role. So it'd be great to hear if you guys can echo that or if you disagree.
Yeah, definitely. It's like key to my fundraise process. I go to every investor, every advisor we have before the fundraise, get a Google Sheet and say, let's get every VC connection that we all have. Like, write your VC, write who you are that has a connection, what partner you have a connection to, and like some notes about what that connection is. Sometimes multiple people have a connection to a VC, and we want to go with the strongest one. And then we pretty much power rank all the VCs that we think is the best fit for our company. And I tee up a note and pitch deck to our advisors and say, all right, here's the date where I'm sending this out to you. You guys forward this to the VCs that you have that connection with, because 95% of the time you're going to get invested through a warm intro to a VC and not just some cold outreach. So you got to leverage that whole investor and advisor network to do that. And then throughout the process, once you're engaged with the VC and they're interested, they want to have another meeting or something, I'm getting back channel feedback from the person who knows them and saying, hey, what are they saying? What can, what can we do? And definitely using them as references in the diligence process too. So I'd say like very instrumental to the fundraising strategy I've used.
Yeah, same thing here. I think for our first fundraise, almost every investor that ended up kind of pulling the trigger was a warm introduction through one of our advisors. And so I think, it just kind of illustrates, I think, the importance of one, having advisors who kind of have that investor network, have, raised money before, is super valuable. But then two, I think it kind of goes back to this point, right? Like not only do you want advisors who can help you really think critically about your business, in our case, our science, but you also want to identify people who, truly believe in what you're doing and are going to champion your company externally because people are going to talk to them and you want to make sure they have something good to say, about your company. And so I think that's really another, I think, essential characteristic that I look for advisors is someone who, truly wants to see us succeed. And if someone asks them about, oh, what's going on at Palm Therapeutic, they're going to have something positive to say.
Awesome. So we're short a person, so we missed maybe some perspective. So what I thought I might do is ask you guys either if there are questions that we didn't cover today that you would ask yourselves as CEOs about advisors, or alternatively, we could flip and you guys can be the host and you could ask me a question if you think that I could provide some input. And then I'll remind the audience that we're in the last 10 minutes or so. And so if there are burning questions for any one of us, please throw them into the chat box and we'll work our way through them.
I'd be
So
happy.
what do we miss, guys?
I'll put you on the spot a little bit, especially as you're an advisor to Andrew, and say, well, maybe real quick, how many companies are you an advisor to?
Formally, probably about a half dozen.
Half dozen, and then probably like informally a lot more that
Too
you
many to count, yes.
so you've got a good sample size. What are the kind of traits or structures that the best CEOs and teams put in place to get the most out of you as an advisor? Like which of these companies are like, man, like they're really getting me to provide the most value, and what are the things that kind of the other ones don't do that make it like I'm kind of wasting my time here?
Yeah, I mean, I think just for context, a lot of not a lot, of one or two person companies. And so that's by choice. I worked for RA Capital for 8 months and other places. And I just, the form companies that have hundreds of millions of dollars already in place are not that exciting to me. I really like to be at the beginning stage. And I think the things that resonate with me are, authentic and transparent. You're not, I don't, when people, some people hide things or afraid to tell you things. And I think that really is a turnoff to me because I can't help you if you're not coming clean. So that's probably, one of the most important things. I think the other thing that resonates with me of late, or maybe, is that I was in a lot of the people I mentor shoes not that long ago. So the profiles tend to be younger, first time CEOs, where I actually feel like some of the mistakes that I made, I could help them not to make. And so profile wise, those are the companies, some have raised, millions of dollars, some haven't raised a penny yet. But if they fit some of those criteria, I tend to be attracted to those. And then, sometimes it's part of an advisory board, and sometimes it's a one-on-one relationship. I don't know, did I miss anything that you wanted me to touch on?
No, that's super helpful.
Oh, it sounds like people can't hear me at least some people can't hear me at times.
It was
And that seems to
breaking
be
up a little bit, but I think generally it all came through, just a little choppy.
okay. Sorry. Poor internet here at the hotel. Okay. Andrew, do you have any questions for me aside from when we're meeting next week?
Um, fortunately, I've had the opportunity to ask Artie a lot of questions. Um, there's I think nothing that comes to mind at the moment. But maybe I'll ask you this. I think you kind of touched on this previously, but kind of how did and it's something that we both spoke to, but how did your view of your advisory board and their role change, from the beginning of DTX to the middle to the end? And how did you think about kind of growing your advisory board along with DTX?
Yeah, that's a great question. So I think, at the very beginning, well, I guess I always had in the back of my mind, I needed to surround myself with people who've been there and done that and who are much better than me, right? And so that was my general philosophy on hiring and advisors to begin with. I think, probably my criteria for advisors, or the bar to become an advisor, kind of grew. I think at the beginning, we started the company on $200. And so anyone who would like listen or be willing to come to a weekly meeting with me, we didn't give out equity or anything. I just thought, if they watched as we grew, that they would get excited, and that would expand our network. So I think, that was the initial philosophy. I think, it's probably not a secret that I had I would guess one of the better Connect Springport experiences, because, I'd say 4 or 5 people from my Connect advisory panel ended up being significant advisors to the company, and several board members at Connect. As we grew, to when we raised our probably prior to raising our Series A, I knew that we needed to have a credible board of business and scientific advisors. So I formalized it. So it wasn't like one-off meetings. It was yearly meetings where we spent, an entire day going through, everything you could think of in building a company. And then I guess as we grew from there, we would just maintain those yearly meetings. I'd say that the biggest difference I don't know if I would call it an advisory, there was an advisory board, but then there was a suite of, 4 or 5 people that I leaned on as, I don't know if it's CEO advisors that had been there and done that I would have at least monthly calls with to do what you guys did, which is, pressure test ideas. There were situations where, on hiring or firing, that I had never been through before, and I sought advice, and my instincts were to do it one way, and I got advice from the advisors, and like, I've seen this 100 times, you've got to do it this way, it's the best way to do it. And I'd be like, oh my God, I didn't think about that. So I don't know, maybe that's formalization. You wanted higher profile individuals, but you still wanted to maintain people who would have relationships with you. I never wanted someone just because of their name. In fact, that is like the biggest turnoff to me, is just to bring on this brand board chair. So you never see them, but you have their name. So okay. I think the last question that we should go over is any advice that you would give to startup founders. I don't know that it has to be about advisory boards, but some lasting advice now that you guys have kind of been through at least some of the early growing pains of starting a company and raising initial capital.
My probably quick advice is it's going to take longer and be harder than you think it is. And I've met so many founders who give up too soon. There's that quick balance between like the fail fast mentality. You don't want to chase something that doesn't have legs, but I also think a lot of people just aren't willing to persevere through the roller coaster and the high stress and the missing paychecks and missing payroll and all the stuff that goes on with being a startup founder. And if you can just keep pushing, a lot more people would make it, that have solid ideas. I've seen friends, stop companies that I'm just like, man, like that's a good idea. Like I swear, if I was running that company, like there's something there, but they can't handle the roller coaster. And so maybe it's a gut check of like, can you handle the roller coaster? Can you go 2 months without a paycheck or something? Because that's probably going to be in the cards at some point if you're a startup for most of us that aren't those crazy rocket ships. So it's going to be hard. It's going to take long, but if you can persevere, I think that's what weeds out 90% of people.
Yeah, I think that's great, great advice, Nick. And yeah, I think that's something that I've definitely learned as well. Is yeah, there's a lot of times where you are pushing through some pretty dark times, and there's a lot of uncertainty going on. But the only way, uh, only way you can guarantee that you're going to fail is if you give up. So I think that's absolutely right. And then, yeah, I think one thing, especially for me, that I learned, and it's something we've talked about, I think, several times here, but was just kind of, yeah, being patient and then just understanding the value of and seeking out kind of building genuine relationships and network within, San Diego and the broader community. I think that my philosophy shifted to, I want to meet people and build relationships that are going to last, well beyond the life of Palm Therapeutics. And I think that that's, both on the company side, but I think just personally has made it a lot more fulfilling. So I think that's a philosophy I try to stick to, is really kind of shying away from transactional relationships and trying to build genuine relationships with interesting people who want to have a shared interest in, your company and the San Diego ecosystem succeeding.
Thanks, guys. I couldn't agree more. Resilience. I mean, I don't know, 99 out of 100 people say no. I could tell you stories about DTX where, even, 3 months before being acquired for, a lot of money, um, not thinking that we were going to raise any money. And then, and everyone saying no. So, couldn't agree more with that. And then, with respect to advisors, yeah, I mean, don't be afraid to reach out to people who've been wildly successful. You'll be surprised at the engagement rate. They've been in your shoes, and they may have a soft spot for what you're doing. So don't be afraid of that. With that said, I'm going to turn it back over to Petra, as I believe she has some closing remarks.
Perfect. Thank you so very much. I hope everybody on the call learned a lot. There was a lot of great information here for all the founders. And so thank you so much, Artie, for the moderation today, and for Andrew and Nick, and all three of you actually sharing all of your stories and good advice, great insights, and, really great advice for startups to keep in mind as they build their advisory board. To everybody on the call, thank you so much for joining us today. I hope you found it insightful for the companies that you're building. This webinar is recorded and will be made available to everyone. And we hope you'll be able to join us for future sessions about capital insights. And with that, I'm going to close this webinar and wish all of you a wonderful day wherever you may be. Thank you so very much.